And welcome everybody to another episode of Smart Money Circle. I'm your host, Adam Sarhan. With me today is Sheena Hanson, Principal and CFP at Uncommon Sense Investing, with approximately 210 million in AUM. Sheena, thank you very much for being on the show.
Thank you, Adam. Excited to be here.
So, Sheena, can you start by telling us your story and how you got involved in this business?
Yeah, sure can. It was from a very young age. My father is the founder of our firm, and so he really kind of coached me and groomed me from a very young age to, have the desire to follow in his footsteps and be in the financial industry. Um, so I went off into college and got my finance degree. That's really where it all began. I finished my college degree with an internship at his broker dealer at the time. So I went into the broker dealer world right away. That's where I got my feet wet. And, I knew what my path was going to be. Ultimately I wanted to join my dad in his private practice. And so while I was there, my goal was to just be a sponge and jump around all the different departments, which I did. So I started in the trading and services department, moved on to sales supervision where I supervised advisors, commission-based work, and then I jumped over into advisory where I supervised the advisory work. So really felt like I got a very well-rounded kind of bird's eye view. If there was one thing I would have maybe done before leaving, I would have maybe tried auditing so I could actually go into advisors' offices and kind of see what they were doing. But I felt good about that experience. It really kind of set the stage.
I love it. So, Uncommon Sense Investing is a fantastic name. You worked at your father's broker dealer and advisory firm, and then can you talk about the transition and where you are now, and what you guys do?
Sure. So at the time we were living in Appleton, Wisconsin, and my husband had a job. So I wanted to leave the broker dealer, but yet I wanted to get on the client facing side. So I actually kind of had a remote branch office in that city at the time, and I serviced clients for the very first time remotely. So a lot of my work was done over the phone. In fact, I actually had an office sharing with another advisor who ran his own separate practice. So I was able to learn some really great things from him as well. It was a good experience, but I ultimately learned that I can't do this business remotely. People want to see you. I wanted to see people. So I ultimately moved back to my hometown to get more client facing and just really just jump right in.
Oh, that's perfect. So at Uncommon Sense Investing, what do you guys do now?
So now, we transitioned to being an RIA 2 years ago. We left the broker dealer. We were forced to make the change because our broker dealer was sold. So at that time, we needed to either just go with the purchasing broker dealer or make a change. And at that time, we knew that the RIA model was right for us, and so we went in that direction at that time. And couldn't be happier with that transition. So we are 100% fee-based, all managed money. We get dirty and manage the portfolio, so we do all of our own research in-house. My dad's background, he's always been a big stock junkie, and so our portfolios for the growth side of them, they're individual stocks. So that's something unique, I think, to our firm compared to others.
I love it. So, again, just on that theme, it's my next question. Tell us a little about your investment strategy and how you play the game.
Well, the strategy is fundamental in nature. The people that we deal with are all long-term. Most of our clients are pre-retirees or retirees or higher earning accumulators. So, the approach is fundamental. It's long-term. We do have a bias towards value. And, we like that strategy just because over the long term, there can be less volatility. And, we know our clients like less volatility if they can still get, close to average market returns. So bias towards stocks, bias towards value, very, long-term, low turnover portfolios.
Oh, very nice. So I guess the billion or trillion dollar question is, how do you define value? I know value, like beauty, is very subjective. How do you go about, if you don't mind, just explain a little bit to the audience or educate us a little bit on how you define value?
Well, value, certainly there's certain metrics that we take a look at with our research process. You know, we do a lot of research, using different tools um, that would define something as a value stock. Undervalued, really. That might include taking a closer look at PE ratio, dividend payouts, price to book ratios. So kind of looking at some of those key metrics to ultimately figure out if it fits in with what we're doing or not.
And do you tend to look at trailing or forward PE and ratios?
So far, we've been looking at trailing, although a lot of the data available is forward looking, but we prefer to use trailing.
So basically, you have a trailing PE ratio. You see the number, and then you compare it to the market, or do you compare it to other industry stocks in that same industry, or how do you determine whether or not, with respect
We
to PE?
compare it to stocks in other industries, and we also look at different mutual fund lists and things as to which category it's falling into. We use Morningstar a little bit for our research as well.
Oh, very nice. Okay, great. So just, you're constantly hunting for undervalued stocks, and then once you find them, and that have good fundamentals, more or less, they have lower attractive PE ratios, attractive dividend payment, price to book, all that other fun stuff.
Yes.
Love it. And then how do you handle risk, and what mistakes do you see people make with respect to risk management?
I see risk as a moving target. If it's not something, it's something else. Right now we're in an environment where the markets have been really good for a long time. 2008, 2009 is the last time where there was any real blood in the streets. And so, we've been in a low interest rate environment. Things have been really good. And, I think people, in terms of mistakes, I think people tend to live in the now a little bit more than they should. And they have that recency bias of, well, what's going on now or in the recent past is going to continue. And that's just not true. We know that market cycle, that short-term mentality, it really can get you. And that's probably the biggest mistake that I think people make as investors, is that they live in the short term. They forget about what can happen or what has happened. And speculation. So many times I get clients that, we educate our clients a lot. We teach them about the markets and how they work. And to be successful, you've got to think long term. But I still get those phone calls, hey, can you look up XYZ stock? I heard him on the news, or I heard him from a coworker. I think this could be a good thing. And every time I look it up for this person, and it's something that has just gone gangbusters within the last 6 months or year. And, it's a terrible time to get in. But of course, people don't think about that.
Yeah, that's a great point. I think with Jesse Livermore was the one who said it. He says the best advertisement for a stock is the price.
Yes, yes.
All right, that's great. So
I think Jesse Livermore also said that the markets will never change, but people will.
Yes, for sure. I love that. So
and the human behavior element.
So you know what, Sheena? I mean, on a separate topic, I have a book coming out that's literally titled Psychological Analysis. So in addition to fundamental and technical, psychological analysis is what I've studied for the last 10 to 20 years. And my whole thesis is you've got to really just learn how to make rational, not emotional decisions with your money. And markets change, bubbles change, assets change, but the one constant is human nature. So I definitely smell what you're cooking there.
Mm-hmm.
So, what are some timeless lessons you've learned along the way?
Timeless lessons. Well, given my experience and working with clients and just my career path in general, I'm a believer in trying to achieve and work to your best potential. And I've found that personally I've had the most success when I'm a little bit outside my comfort zone. I think it's easy for people to stay inside their comfort zone, but you can't advance nearly as much as you could if you're always pushing the envelope a little bit and not giving up. I found that I mean, I entered into this industry for the first time, client facing. I was in my mid 20s and I'm a female.
Right.
And it took me a long time to be quite frank, feel like I really knew what I was talking about
right. Understood.
with retirees.
Understood.
I mean, I just didn't have that perspective. Gaining confidence and just really showing up and doing your best and digging deeper. I was always doing things that I felt would kind of put me to the next level or really add value with my knowledge or add value to what I can bring to clients. And so, I think try to live outside your comfort zone a little bit and not giving up and just pushing forward, even when you feel like, you might be off course.
Nice. And then for markets specifically, do you have any investment lessons that you've learned with respect to whether it's buying or selling or holding or anything in between?
Oh yeah, absolutely. Well, the idea of compound and time, I think, is one that we just cannot forget. Time in the market is really what matters the most. And so getting started early, I mean, that's one thing that I see people in terms of over their lifetime, just getting started early would really improve the outcome. So I think that's a big one. And too, when it comes to trading, specifically to trading, that it seems like the market always does opposite of what you want it to. If you're selling out of something because, it's the research tells you to, or it's had such a run up, let's take some gains off the table, you sell out. The market always does opposite. It keeps going higher.
Yeah.
So it's really hard to do the trading perfectly, which is why, you just stick to your guns.
No, that's a very, very good way of looking at it. So what about some timeless mistakes you see people make, and how do you avoid them when it comes to the market?
Well, to your comment about emotions and our brief discussion of behavior, just a few minutes ago, I think emotions do get the best of us. We think in the here and now, and maybe you don't take the risk that is even appropriate or that is possible just due to that fear of loss and market volatility. So I think human emotions really cause people to make mistakes. And two, I think really taking a bird's eye view of financial planning and wealth accumulation. There's so many pieces of the pie that affect that. It's not just the market volatility going up and going down. It's how you invest your human capital in yourself and your ability to work and your willingness to work, your ability to live within your means, income coming in, expenses going out. There's so much that people can control within their financial lives outside of just what your investments are doing. So really being able to see how things work together versus just the investments that you should be doing.
Nice. Very nice. So another question, what's the best piece of advice you've ever received or you've given?
Oh, goodness. I've received a lot of good advice, Adam. I feel very lucky in that I've had awesome mentorship. I have, people who've really sincerely taken me under their wing, and I wouldn't know nearly what I do now, if it weren't for those people. And so,
by the way, Sheena, just let me jump in for a second.
Off of that experience.
Sheena, let me jump in for a second. That's exactly the purpose of the show. I'd love to get just timeless lessons, those kind of pieces of wisdom, the nuggets of wisdom you're about to share. That's literally why I started the show. So please, by all means, take your time and indulge us. We're here.
Yeah, I will. There was one individual at the broker-dealer that I worked at starting out in my career who, really told me to just continue to invest in yourself, hire a coach, get someone objective to push you along. And I've done that. I've had a couple of coaches in my life outside of people who have been my mentors. And I think that's been very key in trying to help me develop my own vision for myself and my life and my business and where I want to go. So, whether it be hiring a coach, finding a mentor, um, that's huge. I mean, that will really catalyze anyone's ability to move forward. So coaching and mentorship, I'm a huge believer in. Um, and that's probably my biggest takeaway. Another thing is I've really been made aware how huge marketing is. I'm not a natural salesperson. I feel like I was very lucky with how I entered this business and being able to come on board with my father's firm, because I'm not a natural salesperson, and the barriers to entry of being a financial advisor are pretty high unless you're very strong in sales. Um, and so I think how you market yourself is a very big deal, whether it be in your personal life, whether it be in your professional life. We do a lot of marketing in our business. We have a radio show, we do billboard, we do a lot of marketing. And so I think that's one thing that a lot of financial advisors do miss out on is that marketing piece, because really, I mean, the way that people perceive you, that goes a long way with prospecting and keeping the clients you have.
Yeah, that's a really good point. And it works for everybody, like you said, personal and also people in the business. In any business you're in, you got to be out there marketing and telling people what you do.
Exactly.
Yeah. So, Sheena, thank you very much. I guess the last question here is, what is the best way for people to get in touch with you?
Sure. Yeah, you can find out more about our firm, or if you want to reach out to me in particular for anything, Uncommon Sense Investing is our business name. Our website is uncommonsenseinvesting.com. Remember, sense is spelled CENTS. Or give me a call at 608-563-2437. That's where my office is at. Our firm is located in Janesville, Wisconsin, so right in the heart of the Midwest.
Beautiful, beautiful. Well, thank you very much, and hopefully we'll talk again soon.
Thank you, Adam.